No.
Okay, everyone, and welcome to the Cocktail Hour with John Thomas and Stephen. I'm Anka from TradeOutLoud, and Stephen is actually sharing his charts, and we just started the conversation while the mic was still off, and we were sharing a little bit of information about what stocks are prone to rev up, let's say perhaps into the really close upcoming future.
Yeah, so I'm looking at a basket of stocks that they all have the same pattern effectively. So you can look at something like a Boeing, where Boeing got crushed in March. It had a spike in June, and then it's gone sideways for 3 months. Same kind of thing in United, same kind of thing in Spirit Airlines. You could just look at Jets as an ETF. They're all variations of a theme. And then you can take that kind of idea and look at Simon Property Group as an example. And then you can even look at the banks. You could look at something like a JP Morgan. And they all have very similar characteristics because they sold off hard in March. They spiked hard in June. And one of the reasons that we saw that spike in June is because if we look at the 10-year note, where did it go? There we go. Back in June, we saw that just a decent sell-off, so a decent spike in rates. And my belief here is that if that happens again, then you will see another squeeze in those names for some really nice moves. So, you know, everyone's looking at the FANG stocks and Tesla and saying, you know, how far can they really go? There's some decent opportunities for convexity plays to the upside in those names right now.
Absolutely. And plus there are, tons of traders, Robinhood traders that are still buying, the Tesla, the Apple, and everything else under the sun, everything tech.
Yeah.
But I think the time for a rotation is soon. So in these stocks that have been a little bit beat up, they haven't had any participation, but they have not made any new lows. So I love your SPG idea. And Boeing as well is, and I think it's on everybody's watch list because it has gone sideways for too long. And let's not forget that the most dynamic moves are happening from very small ranges or from very small candles, especially on the weeklies. And we're really looking forward to this next fourth quarter. And the truth of the matter is that we're, earnings season is winding down. Not much, happening into this week. We're heading towards the long holiday weekend. Everybody's in, kind of like a long weekend kind of mode. And John, probably, all the suits are heading to Hamptons right now. So I think they're going to call it a week probably around Wednesday. And I think that, this week I don't have, high expectations. I'm expecting a low volume kind of week. But definitely things are going to probably start to gear up into next week. So,
well, Anka, unless Matt Buckley shows up soon, this is all going to turn into one giant love fest because we all basically agree on the same big picture. You can basically divide the world into, pro-COVID stocks, which are the big techs, and anti-COVID stocks, which are all the domestic plays like banks, cruise lines, hotels, and so on. And you have immense profits. You have essentially $1 trillion in unrealized profits in technology stocks now, which has been made only over the last 5 months. And at the first sign of any real weakness, that whole sector falls apart and all the money pours into the domestic plays. So that
can I pile on that really quick?
For the remainder of this year. And of course, timing is everything.
I'll add to that. I've done a lot of work over this over the weekend with you've got a confluence of a couple different things. So if you go and you look at how Tesla traded back in February, March of this year, you saw that massive squeeze. And it wasn't just a short squeeze. It was because so many retail traders were buying calls and there was so many there was just a lot of size out there. The market makers got screwed and they were forced to continue to adjust and roll and continue to buy delta bi-directional exposure into that rally. The same thing's going on in Tesla again right now, but it's also happening in Apple, Amazon, Facebook, Google, and Microsoft. And those 5 stocks comprise 50% of the weighting in the NASDAQ. And so you have all of these speculative call buying things going on, and that's actually trickling into the broad-based indexes. So if you look at, for example, the NDX, that's not the NDX, all right, which has ripped higher during this entire time. If you look at the VIX for the NASDAQ, it's at 20-day highs because you have this massive squeeze going on in calls. So yes, as soon as the premiums in these options get high enough to cushion any further upside moves, there is a very good potential of a rug pull in tech. And because all of these things are lining up, my guess and how I'm positioning is that it's going to be commensurate with a pretty sizable rotation trade, right? And we've talked about the COVID proxy plays and then coupling it against the tech plays as well. So I think that's a good trade. It's a little, everyone knows it's coming, right? It's a function of when. And I think we're getting close. We're pretty close.
Yeah, if there were an ETF that were long FANGs, short FANGs, long banks, cruise lines, hotels, movie theaters, you'd really want to be loading up on that ETF right now. Well, that's going to be one of the great risk reversals of all time. When that
a pretty clean play to do that is, this isn't my idea. This is Mark Sebastian over at Option Pit, but it is long the Dow, short the S&P, because Apple split, the weighting in the Dow for Apple is going to change, and the Dow will be much less sensitive to price movement in Apple. But it won't be like that for the S&P, or it won't be like that for the NASDAQ. So you can actually kind of get that trade. A couple different ways to play it. You can do futures, you can options, and so on. But I think that's a pretty good way to play it in the near term.
Yeah, that's absolutely true. In fact, 1,000 points of the 2,000 point move in the Dow in August was Apple.
Man, that's a lot.
It's a lot. That is a lot. It's too much.
Yeah, and the thing is, like, people always look at precedent and they say, okay, how many times has this happened before? And we've seen the indexes get super top heavy like decades ago. And everyone's like, oh, this has happened before, it's not a problem. Well, it's a problem because the derivatives markets for these stocks are now so large that it's directly affecting the markets. And that has, in the past, been a very bad thing. Remember back in Feb 2019 or Feb 2018 when the XIV got so big because everyone was shorting vol, even though they didn't know what they were doing. Right. Yeah, and we had the vol-apocalypse. Right. And this is a different flavor of it, where if we see a decent sized drop in these stocks, it will cause the market makers to actually go out and short NASDAQ futures, short these stocks to rebalance their directional exposure. And then it becomes a negative, basically a structurally unsound shift in momentum. And that's where we get the rug pull.
Mm-hmm. Yeah. And speaking of 2018, that volatility, so that's when it started in February. I think it was like February 1st. And if you guys recall, Russell was the first that turned around and basically gave the sell signal to all the major indices. And also the volatility returned into the end of the year. So remember, it was 2 years ago when the biggest volatility actually started. Actually was bigger than the one that we had in February. So October, November, and December. Remember, the turnaround was on December 26th when we had the Santa rally. That was the rotation point in all the indices. And there were very those 3 months, October, November, and December, were very difficult months to trade.
Actually, like Steve, I also spend my entire weekends looking at hundreds of charts. and it came to an amazing conclusion this weekend. If you look at NASDAQ, real estate, bonds, and gold, they all have identical long-term charts from December 2018.
All right, let me pull it up.
They basically all go straight up.
Mm-hmm.
And that never, ever happens, except when you get these extreme liquidity events, which really have only happened twice in history. One was the dot-com bust in 2000, and the other one is now. One other thing is that concentration in the top 12 stocks, concentrating of market cap trading volume in the top 12 stocks now is higher than it was at the dot-com bubble top in March 2000.
Yeah. And that somewhat makes sense because you had a lot of runners back then. The last time it was this top heavy was something like the Nifty 50. Back when
I remember the Nifty 50.
well, I don't.
Eastman Kodak.
Yeah, I was about to mention
General
Kodak.
Motors, U.S. Steel, Boeing,
Yeah.
all the
General Electric and
all
those.
the blue chip stocks.
Yeah.
And then the oil shock hit, and U.S. went off the gold standard, and that was the end of the Nifty 50.
Yeah. So I'm gonna take a look at gold really quick. Did you guys talk about gold already?
No, not. Go ahead.
Well, I'm just very curious right now. I am looking the shorter term trade. I'm looking at the SEPOCT 195 call calendar, basically looking for a play against the recent highs. I'm considering saying, hey, you know what? If the stars line up, you can see how robust that analysis is. If the stars align, it would not be surprising to see a retest of the most recent highs just to act as a magnet. I'm not sure how much further and faster it can go after that. But I think it's not a terrible idea to start looking at precious metals again.
Yeah.
Check silver.
I agree.
1927 is the old high in the gold cash market.
I actually have a trade in gold, and I think because I'm looking for setups, and there is a weekly buy setup that is developing, and last week's high was I think it was 1987 or something like that, and I have a long position that is already on. I already have the limit order in at 1988. And I'm looking for 2025, 2050, and 2080, maybe into those old time highs, into the 2089.
Okay.
So yeah, I am long biased. Silver as well.
Yeah.
So silver, yeah.
Yeah, silver is going to $100 an ounce.
Yeah, that's
Silver
that's ambitious. Where were we in 2011? SLV was 44.
We were at 50.
Yeah.
We were at 50 because I shorted it at 50.
Yeah.
That's why I remember that trade.
I remember that too. I was actually at a fundraising event, and one of the precious metal dealers would not shut up about it. And he talked about how it'll just keep going up. He's like a Tesla bull, except for silver back then. And that was my signal. I'm like, okay, it's time to start actually stocking short on that. So it wasn't even a technical signal. It was actually a cocktail dinner where I got super contrarian against him.
Well, I don't know if any of you people know the name of Nelson Bunker Hunt. He's the guy who cornered the silver market in the late 70s and then went to jail for it, or at least lost all his money.
Yeah, he lost all his money on it.
That was the last time, the time before last, that we hit $50.
Okay.
And the price got so high that Kodak was about to go out of business because it couldn't get any silver to make black and white film.
Yeah. Man, that's a throwback.
And that was a long 50-year wait between peaks, from the late 70s to 2011. So that's, it really was 30 years, a little more than 30 years peak to peak. But once you broke the old highs, it rocketed to 50.
Yeah.
It's like silver has this bullseye of $50 all over it.
Sure. It's just it's a psychological level and it acts as a magnet.
It is. It's like, exactly, it'll be like a magnet, just like 1927 in gold was a magnet for gold for the last 3 years.
Mm. Okay. The other space I've been trading, continue to trade. So we've talked about FANG. We've talked about some of these COVID proxy plays, metals, all of these software as a service companies that have seen massive runs. And you also have the e-com plays that are kind of tied with that. And those are the true COVID plays, right? You've got Zoom, and Zoom it traded 325 at the close. It's currently trading $400 a share right now.
Earnings, yeah. It reported earnings after the close.
Yeah. And
double expectations.
Yeah.
Yeah, they killed it. And I'm looking at this because we saw a lot of SaaS stocks. They rallied really hard into earnings. Like Datadog was a great example where it jammed hard into earnings into July, and then August it had earnings. They were great, but it wasn't good enough to justify the share price at $90 a share. That's why you saw that gap down. And I was expecting that in Zoom. I was saying, okay, Zoom at $300 seems a touch rich, right? Mm-hmm. But they killed it, and it's trading 400. I think that's a little rich now. But I've played this long and short since March. One of the great trades was when the New York Attorney General basically sued them over privacy concerns, which is a pretty good signal that you're a good company now if you're getting sued by them. But now I really don't. I'm not sure how you can justify the valuation of the company without something else as their product.
Zoom doubled their earnings, and that off the back of what just I've been paying them this year. We actually recommended the stock at $50 in December.
Yeah. It's been a great
and that
move.
was already up $20 from the IPO. So we thought we were being aggressive then when the Matt Hitch technology letter recommended it. Up here, all you can do is say, wow, wasn't that a great call at $50? You wouldn't touch it at a 10-foot pole. It's actually up 10 times from the IPO price 15 months ago.
Yeah, it's pretty insane is not the right word.
In other words,
at some point investors
Tesla has over the same exact time period.
Yeah. Well, since we're talking about that kind of idea, a stock I'm short right now, there have been stocks that have run 10x that don't necessarily have amazing earnings or amazing growth, and they're just proxy plays for something or another. And Overstock is one of them, where it was trading at $5 in March. It traded up to $125 in August. They're a combination. It's a weird one. They're a combination of e-commerce as well as Bitcoin for some reason. No idea why. But I think that will continue to be a pretty good short here. And then another example of something that's a little too big for its britches is going to be something like a Wayfair. $20 in March to $340 now. It's a little extended, I guess is the right word. And so
when I'm looking for shorts, I always go visit the marijuana area. After all, how hard is it to grow a weed? The barriers to entry are zero, and there is still massive competition from the black market, which doesn't have to pay taxes.
Sure.
Taxes on the public pot growers, they're about 35%.
Yeah, and you can see that if you look at Tilray. And it'll have speculative spikes, but they're like 2-day moves, and then it just completely fades. Or you can look at an ACB, which is like back when they used to report Robinhood Holdings, ACB was always near the top. And it's the same kind of thing, right? Back in May, it had a really nice push from 4 to 14 or 4 to 16, just done nothing now. I think and this is one of the smarter ideas that I had back in March. Basically, we know that weed is a commodity and it's a bunch of stoners with MBAs, and it's not necessarily going to work unless you sell the shovel. So I like Power REIT because they lease the grow houses. to these stoners with MBAs. So even if weed is a commodity, they got to grow it somewhere. And this has been a great little play, over the course of the past few months. Technically, it kind of sucks right now, so it just needs to base out. But I like it over the long term. And that's more of a fundamental play. It's more of a story kind of play. But it's worth a look if you want to play that space without having to deal with basically the price of the commodity. You're buying the farmland instead of the corn.
Yeah, in California, we call that the selling the shovels to the gold miners trade.
Yeah.
That's how Bank of America, Wells Fargo, and Levi Strauss all got started.
Yeah. Speaking of
And they're
that,
still
since we're
doing
talking
that,
shovels,
with all of these IPOs in the tech area, the ones that don't have products or lose money, that's still the selling shovels to the gold miner trade.
Yeah.
They never stop doing it, except now they're doing obscure technologies and Bitcoin instead of actual products.
Yeah. One of my harebrained ideas is that you can view that same kind of theme with semiconductors. If you remember back in the run in, what did Micron do? Back in 2017, Micron ran from $10 to 58. It was sort of a Bitcoin play, but we're seeing some interesting stuff go on in AMD, and we're seeing some interesting stuff go on in NVIDIA. And this is my harebrained idea is we're getting close to a second push with respect to artificial intelligence, because we saw how GPT-3 worked. And if so that accelerates, then artificial intelligence is basically hardware limited, which means it's not the software that's the problem. It's just we don't have enough chips to build it out. And I think that is a secular trend, even though NVIDIA is it's almost a triple off the lows from March. That's a theme to watch going forward. All right, I got to bail. It was my daughter's first day at kindergarten today, so it was a long day.
Go celebrate.
Yeah, so we're gonna go put her to bed and make sure she's well rested. So I'm gonna go ahead and end my screen share, and you guys can take over, and I'm going to call it a night.
Stephen, it was awesome to have you here tonight, and we're really looking forward to you participating in our next event.
Right on. Take care.
Take care.
Thanks, Stephen.
Yeah.
Yeah, so I think right now we are ready. If you guys have any questions, any stocks that you would like us to look at. I'm seeing that the futures indices right now are just pointing higher. We're having NASDAQ 27 points up. The Dow is doing a mild push, only 15 points up, and S&P and Russell right now are pretty flat. Gold is still ranging like a monster on the 4 hour, so looking good there. Anything that you guys are watching? Stephen was also mentioning Micron. I think that Micron is due for a bounce. I'm not, all of these trade ideas are pretty much short-term swings that I'm talking about, probably a week to 2 weeks max. They're not investing ideas. But they're definitely really great trading ideas for a really quick short squeeze, like in Micron. You could have it right now. It's trading at 45.50. I think it closed in over last week's high, 45.80. Can start moving into the $47, 47.50, and back into the 48 or so. All right.
Anka, do you want to share your screen?
Oh, sure, absolutely. All right.
You should be able to now.
Okay, hold on. Okay, and let me go ahead and share. Okay, so I'm showing Intel right now. We have a questions from Makshu Huri about Intel. Intel looks pretty good right now. I was actually watching it a few weeks ago. And like we had the presentation earlier, and I was mentioning the indicators that I use. You don't see many indicators on my charts, but anyway, just a couple of moving averages, and that's pretty much it what you see. So it had a really sharp drop, and I think this was post earnings, if I'm not mistaken. And then We're finding support yet a higher low compared to the prior. We had an inside bar doji, and then bullish above. It's trying to go back into this 10 EMA. And if we're gonna spike above this this area right here, it can start going into the 55 or so, and it may, you know, may be a good idea for a little bit higher. John, what are your thoughts?
You know, I like Intel. You know, clear bottoming formation there on the charts, and it's one of the few tech stocks that hasn't gone insane over the last 6 months. And I'd be a buyer here. You know, we tried to get in on that last bottoming move at around 45, and then you had this announcement, and it popped so fast you couldn't get into it. So we actually been looking to get back in to Intel through our technology letter.
I think it looks very good, and you know, these are the forgotten names. But I'm telling you, like, I think that pretty soon people and traders are going to start, you know, exiting, and funds are going to start exiting these massive stocks like Apple and Tesla. But hey, John, I have a question for you.
Sure.
Like, you know, we're all saying, and we're all kind of like wishing that, you know, there's going to be this sector rotation. But let's not forget that at the end of September, we can totally expect another, and this was the case last quarter, we can expect another mini window dressing. And that's the time when funds load up again on these high flying stocks again. So
yeah, it's, you know, in a normal market, I would say yes, but this has been anything but a normal market this year. You can take your old rule book and throw it out the window because most people's models have blown up. You know, I would say in a normal market at the end of September, window dressing is probably the #1 factor. This year it's like number 10, you know, and you can put, you know, Great Depression, COVID-19, presidential election, you know, extended tech prices, all that are way ahead in the line. So, you know, it used to be a great idea to sell in May and go away, and that didn't work out too well this year either.
I agree.
So you have to be careful with a lot of these old traditions to live by, because this year they absolutely are not working. And you just have to kind of, you know, the last 5 months has really been close your eyes and buy. Forget about everything else. Forget about valuations, charts, resistance levels, liquidity, everything. And you just buy the damn market. It really has been the perfect idiot's market. But then we have a market dominated by idiots right now. So
that's true.
You know, anybody with any kind of knowledge or experience has been dumped into the ash can of history. That's about to change very shortly, I believe.
Yeah, and this was a market for the brave, no risk, no gain,
or the beginners.
Yeah,
it's been a great beginners market.
It has been. It has.
Everything you touch turns to gold, just like in '99.
Yeah, yeah. Stocks never go down, right? Stocks always go up.
Well, if you've only been trading 5 months, they never do go down. You know, if you've been trading for 50 years, down is something tattooed on your forehead.
Absolutely, absolutely. And, you know, circling back to Intel, let's not forget, guys, that we have just wrapped up August tomorrow, September 1st, and we have just closed a very important candle on our charting, the monthly candle. So that's going to be a really great indication. So here's an Intel, you know, the more I look at it, you know, I just realized that, hey, tomorrow, September 1st, if we get a punch over 51.5, we're going to issue continuation all the way at least into this 50 SMA. At least this is the first pit stop before any gyration comes in. But
yeah, also there's a whole group of these called legacy tech, and these were the high flyers of the late 90s. Another one of them would be Cisco. It'd be
Cisco,
interesting
yeah.
if you can throw a Cisco chart up there too.
Yes,
And that's
I love
Cisco,
Cisco.
the networking company, not the food company.
Oh, the what?
I'm just kidding.
Oh, okay, gotcha.
No, you have the right chart up there, and it's almost the same as
Did
Intel.
I get it wrong? I'm like, what?
No, there's another Cisco, which is SYSCO,
It's why
delivers food.
Right. I love Cisco. And here's what I love about Cisco. I think this is going to be the next great trade. We're having, so this is this week's candle. I think if we are going to get, and this is actually, I have it on my high alert. If it trades over 42.50, I am in for a target all the way into the 44. Hey, Ted. Yeah. It's been a really long day for everyone. So I was like, excuse me if I don't get it.
It's been one of those days. Hey, there's somebody here asking about foreign exchange trades.
Oh, okay,
Put
sure.
up FXA. This is my #1 favorite currency trade over the next 5 years.
Okay.
And that's the Australian dollar. And this is also a recovery trade on par with JP Morgan. It's also no coincidence that copper had a new 3-year high today.
Copper, I know.
Australian dollar takes off.
Over
We've been
$3.
recommending the Australian dollar since it was at 60 cents. Our target is $1. So there's nearly a potential 60% gain off the bottom to get you to 1-to-1 on the Australian dollar. So that's probably the best currency trade out there in the market right now. And #2 is probably the euro. Euro got their COVID-19 epidemic under control faster than we are. So their economy is also recovering faster. So look at the euro against the dollar, and you can see there's
and this is
another great entry point setting up.
Right.
We trade everything all the time. So often if there's no good trades like there are in the equity market right now, then you go on to bonds, energy, foreign exchange, real estate, commodities, you name it. There's always something good happening.
That's absolutely true. Yeah. So,
yeah, there's the euro. Looks like it's breaking out again to the upside.
Yeah, it actually break out 1920. 1920. It looks higher, and it has a really massive tradable void. Massive, at least into the 125. At least into the 125.
And a weak dollar is a key part of the U.S. economic strategy right now. They want to weaken the U.S. dollar to help our export market, and you could have another 10 or 20% to go in the U.S. dollar against all the other major currencies. The U.S. dollar is trash right now.
Right. Okay, 2 more stocks in here, SG. DLTR, let's check it out. All right, here's DLTR. And kind of spiky here. Haven't looked at DLTR in quite some time. Monthly chart still wrapped up a month with a huge topping tail here, closed below the 20 SMA. So not a big fan right now. The weekly still into this mumbo jumbo kind of candlestick, still holding, as long as it's holding above the 200 SMA and above 90, still pretty interesting, but it's a little bit too kind of fleecy and flaky for my taste right now. So DLTR, what's your thought, John?
Well, we're not really in love with the retailers. Dollar Tree is one of the ones that's been doing better, but it really represents old tech for us. So I think the challenges for all retailers have been so horrific that there are just too many other better things to say. That said, you can't argue with that chart, which is near a double off the March low.
Yeah, yeah.
And the
Agree,
problem with
agree.
these companies, Dollar Tree and Dollar General, is that it's not finding customers, it's getting product. You know, supply chains have been so disrupted in the United States because of the epidemic that companies can't get inventory. You know, if you go into a bicycle shop these days, they have no bicycles, they've sold them all out. If you go into a camping shop like Big Five or REI, they're constantly out of stuff. They never used to be. So, you know, companies are selling product, but they just can't get their supplies anymore because the company's gone bankrupt that used to supply them, or people are sick, and everything is delayed.
Yep, that's true. All right, the next stock is ETSI. ETSY, sorry about that. All right, so we have, I think that ETSI is getting ready for a pullback.
Yeah, I would say.
Look
No,
at
this is in the
candle.
tech category of sectors that have run too far.
Exactly.
You know, 40 to 120 to me sounds like a lot. So too many other better fish to fry, and they're sort of a quasi, eBay, in that they are helping people sell their little arts and crafts and so on. So yeah, this is a COVID-19 stock that worked. Totally online, totally digital.
Under 116.50, I would be a short seller.
Yeah, all of these things, all these tech stocks that have fantastic runs, they're all ready to roll over and have major sell-offs.
Major sell-off. Like this one is like really cooking. Like this candle right here. Like yikes.
Yeah, no, yikes is a word you're going to get used to if you're not already. If you didn't get a yikes in March on the sell-off, you'll get a double yikes on the next sell-off.
Exactly. All right. Anything else here? Let me just see. Anybody care to address what Doc Stevenson said earlier about most of the moves are coming after hours? I don't necessarily agree with 100% with that statement because, a lot of the moves happen during market hours. Futures moves lately have been happening in the overnight session. But as far as stocks, and I don't know, Scott, if you were referring to futures or if you're referring to stocks.
Yeah, what you are seeing is really huge bunching up of orders at the opening and the close. Probably 80% of the trading every day happens in the first 15 minutes of the day and the last 15 minutes of the day.
Correct.
And we trade a lot of options where I live, and that really skews option prices like crazy, because I'll put out alert and people say, there's no way you got that price. It's trading at X now. But I said, yeah, but 15 minutes ago when we did the alert, it was trading at 2X. So yeah, and that is a function of the large number of high frequency traders. They only day trade. They are not allowed to carry positions overnight. They go home 100% cash every night. So they can only institute positions at the opening, run them all day long, and then they have to be out at the close. So I often tell people when I put out an alert, if I put out an alert like an hour before the close, they say, oh, you're a mile off. I'll say, wait till the close.
Exactly. And the close,
high-frequency traders got their books. You can often get done at great prices if you have pre-existing limit orders in.
Exactly. All right, we have a question here. Is it better to day trade? Is it better to trade in futures or stocks? I say both. And I trade both futures and stocks. I don't do many trades in currencies. I used to, but now I'm very involved in futures and stocks. Futures are very advantageous from accounting standpoint, from the taxing standpoint, And it's really nice to be a complete trader, a global trader. And, you know, basically when you're trading, you know, futures and stocks, or even if you want to add currencies, if you know how to handle a chart, you could have any kind of chart thrown in front of you and you can trade it. So if there's a pattern out there, whether it's futures or stocks or whatever it is, you can trade it. But I day trade futures for tax purposes, and I swing trade stocks. So I don't have many many positions, because when I back in the day when I would day trade stocks, I would have like 8 to 15 positions a day. So trades a day. So that would be a lot. Now I have between 10 and 15 a week. But yeah. John,
first of all, a lot of stocks don't have futures. They're too small, too illiquid, and the market makers can't offset the risk. But you know, if you can, futures is always the first choice, because you can trade a lot of things that you can't trade elsewhere, like bonds, commodities, ags, foreign exchange. All have had very precious metals. All have very long-term presences in the futures market. So the only problem with that is that the brokers require much higher level authorizations for people to trade futures, because futures are their #1 source of lawsuits. Because,
exactly.
you know, the leverage on futures can be anywhere from 10 times to 100 times the underlying. So that's where the most money gets lost, is on futures trades gone bad, you know. So the brokers are extra special careful on who they deal with in the futures market for that reason.
And it's easier to open an account in the futures market because you don't have, you know, the $25,000 requirement. You can open an account now with $500 and trade micros, or even some small commodities, some micros and commodities. And you know, traders that are very excited to get started in the market, they said, you know, just, hey, I'm not gonna wait until I come up with $25,000. I want to make my money now. So the problem is that they open an account, they don't know how to trade futures, which are really heavy in contract value, and they blow up their accounts because they don't position size, they don't have, you know, the necessary amount of knowledge to trade the futures market.
Yeah, one other problem with futures is the limit move, which is usually about 10% of the underlying. And those happen every few years. I mean, we saw them this year in the stock market futures, but in past years, I know people who are long beef futures when mad cow disease broke out, and it didn't trade for 3 days. It was limit down 3 days in a row. So similarly, in the 1991 Gulf War, there were people who were long oil futures up the wazoo, and the prices just utterly collapsed once the war started. So it's another situation where you take a lot more risk, but you get a lot more gains in exchange, and you just have to really know what you're doing. Futures is not a good beginner's market.
No, that's why many traders blow up their accounts in the futures market.
Yep, seen it happen a million times.
Yeah, and it's sad. It's sad. It can be, it definitely can be, you know, and I'm looking right now at the futures market, up close to 50 points in NASDAQ. This is huge. This is huge.
Here's a
NASDAQ
question from Walter. When do you think the Dow will hit 30,000?
Oh, okay.
My 10-year target in the Dow average is actually 120,000. So, but I think we need at least a 20–30% correction before we enter the roaring 20s in the next golden age. So, and when I talk to long-term analysts like Warren Buffett, and I say 120,000 Dow, he says, why are you being so conservative? Because that's only a 6% annualized gain. not including dividends. So it's betting against America works for the short term. It's a terrible idea for the long term.
Right. And I think that we're going to hit it this year by December.
Yeah, I'm looking for like a big post-election rally.
Me too.
After the election, no matter who wins. I mean, the mere fact that the election is out of the way is a major positive. And by the way, that's what happened after the last election. A lot of people were saying, well, if Trump wins, the market will crash. It crashed for exactly 2 hours, and then it took off like a rocket.
Exactly. Okay, here it is, November. This is November 2016. This is election. And you can see this tail right here, this very low. This was the low that was hit, 17,883. That was the low. And then it took off like a rocket. Take a look. This is 2016 election, November. We got a little dip. Still holding support right here. Look at the range that we have. So guys, I'm expecting also to be very sideways going into election, or even a little bit of a pullback going into election. So that would be like,
you know what happens during those quiet weeks going in? Volatility goes up.
True. So VXX, VIX are going to be in play.
Yeah, I remember those days well. After the election, I was up for 24 hours dumping my technology portfolio and buying U.S. steel, railroads, shipping companies, all the great industrial plays. And you got a near double on those things in about 3 months. And then that was it. They never recovered again. And after that, it was technology all the way.
Right, right. So yeah, to answer Rick's question, so is the consensus that the market may drop in October? Well, usually October is the most volatile month of the year. And we're also, volatility increases in October. It's also a very liquid month. This is the massive liquidity that is coming into the market. October, November, and December, the heaviest volume of the year. And I actually love to trade the end of the year.
Yeah, also there is no consensus on anything right now.
True.
People have been so whipsawed this year. They're kind of punch drunk and kind of waiting to see what happened rather than making any big bets. And of course, the winners are the index players, people who've owned the S&P 500 their whole life and never touch it. Those have been the big winners this year. People who try to trade the market, chances are they probably sold the bottom and then bought the top. So there is no consensus.
Yeah. All right. I think this is a wrap. Let me know if you guys have any questions, any other questions. It's 10 o'clock. It's been like a really long day. 12 hours of this marathon of trading. And John, can you please tell our traders where they can find you and any special offers because I know you had a presentation. I am
at madhedgefundtrader.com, where we trade all asset classes, long and short, and with a great trade alert service, trade mentoring service. We're also at madhedge.com, where we host trader summits where we have 28 or 30 different traders coming on at any time, giving us their presentations. So madhedge.com and madhedgefundtrader.com is where I live, and look forward to working for you.
All right. Yeah, that's it. madhedge.com. All right. And it was a great pleasure having you tonight, John. And I really hope that you guys, found some very valuable information in today's presentations. I mean, I know when I, started trading, retail trading, I was trying to gain my, my mojo into day trading, because I'm coming from the investing field and came from swing trading field. So I just wanted to get into the day trading arena. And there weren't many webinars back in like 20 years ago. You guys have to be very appreciative of what's happening in the market right now, and take advantage of all of the free presentations that you could get your hands on. There's no such thing as a bad free presentation. You're always going to take away something from everything that is being offered. So thank you so much, everyone, for being here. David Kosmeter and I, along with John, would like to wish you a great night and a very profitable week.